There you are. Thank you for staying with us for the second hour of the conversation. And we want to shift gears a bit because countries across the world, as the countries, of course, across the world grappled with the disruptions brought about by the COVID-19 pandemic and the need for social distancing grew, digital payments, which used to be nice to have, transformed into a daily necessity in many countries. And as the corona, of course, and as the industry, of course, continued transforming, this became a necessity for many households, and that is what we want to talk about this morning, how, of course, COVID-19 has accelerated digital payments in Kenya and across the world. And who better to talk about it than the gurus in this industry, and that is our friends from Mastercard. I'm now joined by Sharia Ali, is the country manager for East Africa at Mastercard. Good morning, Ali. Good morning. Welcome to the conversation.
Good morning, Victor. Thanks for having me on the show.
All right, and also joining us, of course, this morning is Victor Ndlovu, is the Director, Country Business Development Lead at East Africa at Mastercard. Welcome to the show, Victor.
Good morning, Victor.
All right, that makes us two Victors on the show. And let me start with you, Sharia. And when COVID-19 struck, everything literally came to a standstill. Nothing was moving. But the only thing that kept us moving was technology. And one of those aspects of technology, of course, was digital payments. How amazing was that?
Well, that's a very pertinent question, Victor. But before I answer your question, I just want, and this show is really timely, and I would like to just make a humble request to all the stakeholders who may be listening to us today, who are part of our ecosystem, to fully support the SMEs who have been badly hit by COVID-19. And not just the SMEs, but the women entrepreneurs who have been impacted much more than their counterparts due to COVID-19. Furthermore, I would request the stakeholders to do everything possible to include as many people who have been marginalized and who don't have access to financial services. You know, we need to really put out a helping hand now so that months from now, when the vaccination benchmarks have been met, and we look back to achieving the same growth rates that we were seeing pre-COVID, we have the backbone of the economy strong enough to really pass through with speed those growth rates and achieve the success that we're all aiming for. So I think that's a very key appeal from my heart to all those people listening, that this is an important action that we must take now.
Okay.
Now, Victor, to your question, now, we are witnessing a rapid growth in digital payments as emerging markets in particular have identified the need to digitize their economies. You know, and there is a need to reduce our dependency on cash if we want to accomplish financial inclusion. Now, digital evolution, which was expected to happen in 3 to 5 years, now is happening in 1 to 2 years. We need to prepare for that. And we have recently done a survey where Mastercard Payment Index shows that 99% of people in Kenya surveyed would be willing and happy to try new modes of payment in the coming year. And this includes biometrics, this includes QR, this includes crypto, and even wearables.
Okay,
now,
all right.
That's just one part of it. Yeah, that's just one part of it. The second biggest aspect is the burden of cash. And that's something I think we need to address as well.
All right. And of course, we will be talking about the burden of cash. But let me just get Victor's reaction, of course, on opening remarks. Victor, technically, COVID-19 has accelerated this issue of course, digital payments. But for you as Mastercard and people who have been in this space, the train had already left the station quite a while ago, isn't it?
Correct. I also just want to start with my opening remarks by just mentioning that when COVID came to the shores of the world in March or February of last year, the Kenyan government obviously responded to that problem that we had, that pandemic that we had. And the first thing that came to mind was, how do we collectively address the concerns from a country standpoint, but also from a digital standpoint? A lot of things changed. So overnight, there was an appreciation that digital was to become an important part of our payment business, and the consumers needed to change their habits very quickly. there was also the aspect of social distancing, which was also brought about by the fact that, we needed to then introduce new technologies that would support, the payments infrastructure, which is, use your contactless card, your Mastercard contactless card for making payments. So the technology changed at that point immediately. Then secondly, there was the issue of cash. Cash was all of a sudden perceived as a dirty instrument to hold. People started reducing their, going to ATMs, going to banks to withdraw cash. And for that reason, cash was becoming a burden for everybody. And therefore, the pace at which digitization increased was to bring it 6 years ahead of its time, which for us payment practitioners was great. And then we obviously needed to then look at the opportunities around e-commerce. How do we actually protect our consumers who are transacting in this space? And therefore, for us who are in this payment business, especially here at Mastercard, it was important to ensure that we actually address the issues at hand. And I think Sharia mentioned the aspect of cash. How do we address the cash aspect? Cash, as you know, is expensive, but people don't know that. We also know that cash has a cost, and that cost could be in the fact of, one, you could actually lose that cash. There's a cost to managing that cash. There's also a cost to actually, counting the notes and so on and securing it. And therefore, a lot of things changed at that point. And for us at Mastercard, we use that opportunity to be able to actually drive the message home, to educate the consumers, to drive awareness within the market, to introduce new partners who were actually going to be able to actually allow, for example, enter new segments such as deliveries for those consumers to be able to pay. So for us, we are ready, we continue to be ready, and we will therefore support the ecosystem in Kenya and in East Africa to actually develop payments even more.
Okay. And Victor, of course, if it was ever in doubt, digital definitely is the new normal right now.
Sorry, could you repeat that, Victor?
I said if it was ever in doubt, digital is definitely the way to go and is the new normal right now.
Yeah, absolutely. So let me give you an example. Our habits changed. So previously we used to go into clothing retailers and buy, clothes, suits. I haven't gone into a clothing store in a long time to actually buy clothes. So our habits changed. So there were winners in this game. The winners were obviously digital, stay-at-home categories, and then obviously we started seeing more people focused on driving needs versus wants in terms of, payments. And the corner store became a very important part of our payment ecosystem. I was then going to the person closer to me than going far away to be able to purchase goods and services. Mm-hmm. But also, there were losers in that game, right? Which is obviously the travel and entertainment sector. We saw from reports that about 74% of that segment was affected within Kenya. We also saw, the education sector suffer because of the schools being closed. We also saw the hospitality, which is obviously the restaurants and bars, they were closed. And as a result, the whole life cycle changed. Okay. And therefore, we needed to adapt to that.
Okay. Yeah. Let me just go back to Sharia for this, because definitely the journey has started and the train has left the station. But if you look at small and medium enterprises, especially here in Kenya, they make up more than 90% of businesses and contribute a significant chunk of our economy. But most of them, of course, have struggled with this issue of integrating and digitizing their payment systems. Given this significant, of course, role that they play in the economy, can we afford to leave them behind?
Well, I think that 90% of all SMEs, so 90% of your economy is actually driven by SMEs. So there is absolutely no way that one can even fathom that we would leave the SMEs behind. And I think it's also important to be mindful of the fact that when a small business suffers, everyone suffers. Mastercard recognizes that SMEs have the potential to make a genuine difference in many communities. Mastercard has also made a global commitment to bring 50 million small businesses and 25 million women entrepreneurs into the digital economy. So our decades of technology investment and expertise in forging transformative partnerships makes us a preferred network for small businesses. And the examples of this are very clear. We have recently had an investment in Kasha. Now, Kasha is a purpose-driven e-commerce platform which ensures women across emerging markets have essential access to health and personal care products. At the same time, we and Mastercard offer SMEs such as Kasha, Mastercard Track Microcredit Program. This is well known in Kenya as Jazaduka, which makes it easier for businesses to accept electronic payments. And not only that, when you're moving away from cash and you put your supply chain and your access to marketplace on a digital platform, you get data. From that data, you get insights. And that insight then results in you getting working capital from financial institutions. And that really helps you then grow, diversify your business, or keep some money for the rainy day like these days.
And that's important, Sharia, because prior to COVID-19, there was the misconception that, this digitalization thing belongs to big corporations, multinationals and all that. I'm just a grocery store.
Correct. No, I think that, and that's why my appeal in the beginning of the program. Look, if we go by the numbers, we were experiencing in East Africa about 5 to 7% GDP growth, right? Now, since COVID's advent, in 2020, we recorded 0.3%. Now, the cost of cash is sitting at about 1.5 to 3% of the GDP. If you do the math, that's a lot of money. For the simple, if you were to simply calculate it, that's a lot of money. Now, we do understand that cash is not going away anytime soon. But even if we move 90% of cash utilization down to 80%, that 10% is a lot of money that could be spent in digital investments, in infrastructure, in social uplift, which is money well spent.
Okay.
And I think that even in 2021, we are looking at 3% growth, which is not back to the normal. So we need to ensure that we take care of SMEs, we get them ready for the growth phase as and when we arrive to it.
Okay. And Victor, maybe on the cash aspect that, of course, Sharia has mentioned, most of those hidden, the costs related to managing cash are often hidden, and most businesses don't actually see it, so they don't really bother to perhaps digitize. Just talk to us about how costly it can be to manage costs, especially in this region of our continent.
Okay, thank you, Victor. So in terms of the cost of cash, we do realize, so one of the studies that we did as Mastercard was to look at, the behavior of consumers as they transact versus, obviously the merchants that are actually accepting that cash. And we quickly saw that, and as Sharia has alluded to, 1.5% is actually the actual cost of cash in terms of, the contribution that it makes towards, GDP, assuming that you actually digitize, the economy. So now more specifically, and I just want to give an example of, typically what happens in the day and in the life of a typical consumer. And I'll start by making an analogy around what we call personal consumption expenditure.
Okay.
So personal consumption expenditure is that amount of money that, for example, if you get your salary today, let's say it's 100 shillings. Out of that 100 shillings, you're going to actually pay for your bread and milk. Groceries, basically, you're going to pay for fuel. If you've got a car, you're going to pay for utilities, etc. So assuming all of that comes up to 50 shillings. So which means you've got 50 that has been left available for saving. Now, the way we measure success in payments business is through that personal consumption expenditure. So typically out of that 100 shillings that you would have actually transacted, or rather the income that you'll have received, the 100 shilling is your earnings. Your 50 shillings that have been spent is your personal consumption expenditure. But you'll find that, Victor, yesterday before COVID, you were actually spending most of those, you're spending in most of those segments as cash. Now, because COVID has come, it has made you realize that you need to change the way in which you actually need to spend. You've started to use other channels such as mobile, such as cards. And in this respect, the utilities that you were paying cash, you are now actually paying either by mobile or you are actually paying by card. And the same thing for groceries, etc. And as I mentioned before, perhaps you're using even the contactless technology that allows you to not even touch the point of sale device in this particular case.
Okay.
So sorry?
Yeah, just proceed, yes.
Yeah, so for us, the cost of cash is heavy, and even from a central bank perspective, the cost of printing money is a cost.
Okay.
And it's a cost that they can do without. So we want to aim to get to a world beyond cash. For example, if you look at countries such as Sweden, 80% of all transactions are now digital, and they aspire to actually reach 2023 and have a world that actually doesn't have cash. So in other words, they're aiming for 100%. I think here in Kenya, we can also aspire and do the same, and we can become the first country, perhaps even in Africa, to actually achieve those kind of levels. Again, with the level of awareness that people have to be able to transact either on a mobile or on a piece of plastic.
Okay.
But we still do realize that 56% of the Kenyans today are still unbanked. So we have a lot of work to do to be able to actually get to the right numbers and to continue to drive the right message across all our segments.
Okay. And Victor, I take note of the fact that you said, of course, the cost of managing cash is heavy. But for most retailers and merchants who are a bit hesitant with, going the digital ways, perhaps because of the direct costs that we see with every transaction that your customers transact. If you look at those costs, can they be compared? Is it possible to compare?
So when you say compare, are we comparing it to
the direct costs that might make some, of course, traders and merchants a bit hesitant to go to the digital way compared to, of course,
all right.
Yeah.
Okay, all right. So I presume in this particular case, you're talking about the cost of transacting.
Yes.
So the way we look at it from a financial standpoint is the cost has gradually come down, and obviously through lobbying, through education, through awareness, and so on. So there still remains a cost. For example, there is a cost whenever a bank signs up a merchant. The merchant, becomes, obviously partnering with the bank to provide those services. And obviously the bank needs to make some sum of money because of the investment that they've put on the table. But we have also brought down the level of transaction pricing because obviously that's the only way to grow. Okay. And one of the things in which we also look at is obviously, by putting a price, for example, to using cash, then you're actually discouraging more people to actually transact on a cash environment. Okay. But for the consumer, it is actually free. So whenever they actually transact on a POS environment, there should be no charge. So it is actually free for the consumer. And okay. I think the message that we should take away from this is that it is free for that consumer to be able to transact over electronic channels.
Okay, and let me come back to you. Let me come back to you, Sharia, on the point about SMEs, because quite a number of them, they have a very major issue of revenue leakages when it comes to, of course, streamlining their payment flows. What are we doing for them, especially when we encourage them to move to this, digital platforms and digitize their payment systems? What difference does it make?
Well, spot on, Victor. Being forewarned enables one to be forearmed. So when SMEs turn to digital payment solutions, the clarity and the transparency that they get from the technology and the capabilities that we offer lets them trace their payments and then grow their businesses through efficient and effective payment flows. The challenge that we were just talking about in terms of cash handling, there is a cost of cash, and the only thing is that we don't perceive it as cost of cash. When you have to go and take cash out of a branch, there is travel costs, time-related costs. When you take cash, you are foregoing interest. There's the risk of theft that is involved when it comes to cash. So there is a cost for cash. And similarly for businesses, like you mentioned, in terms of if you're doing your businesses in cash, there's going to be the risk of cash leakage. There is no trail when it comes to cash commerce. So without the historic business records, it's extremely difficult for small businesses to access financing and manage their businesses efficiently. The bottom line is that digital payment solutions removes cash from the equation and therefore prevents leakages. I would humbly request all stakeholders of our distinguished ecosystems to promote this awareness amongst the SMEs.
Okay. And of course, the key challenge with growing many small businesses into big corporations and to be able to compete favorably against bigger businesses is, of course, their level of how they can compete in these platforms. And given this, of course, we picked this from the report by Mastercard itself. There's this index, and 77% of customers or respondents in that survey actually agreed that they were going to buy from small businesses or trade with them if they increased the amount of or the payment options that they have. Talk to us about what this digitization of payments means for SMEs to be able to increase their competitiveness and perhaps grow and face the big boys in the market.
I think, yes, I think your question is very pertinent. So let's look at it from a layman's perspective. First of all, there are 2 billion people across the world who do not have access to financial services, right? And if we delayer this for a minute and we come to, let's say, Kenya in specific, what's the biggest sector in Kenya? We've got the agriculture sector. Now, this sector contributes 34% of the GDP and employs 54% of the workforce. Now, I'll give you a very specific example, Victor. Pauline is a proud woman entrepreneur and farmer in Nandi Hills. In the past, she would not have access to financial services. She would, to get her supplies of seeds and fertilizers, she would have to go far and wide to get access to that. And when it comes to access to marketplace, she again struggles to get to that because she has to physically go and interact. Now, if we fast forward to now with Mastercard's Farmers Network program, she was able to digitalize her supply chain. So she wakes up in the morning, she takes her feature phone, she's able to order her goods and supplies through that phone. Now, when she wants to sell her produce, she gets onto the marketplace again on her phone. She's able to get the best price out there. And now she's able to have efficiency within her business. Now, what happens is that while she's doing this, over a period of 12 months, she will have data. This is electronically certified data which financial institutions can use to underwrite her, to help her grow her business. Now, this is just an example of a very proud woman entrepreneur in Kenya. But if we scale this up to all the SMEs to say that, hey, look, if you're looking for low barrier of entry products, so if POS machines are expensive and you believe a QR system is better for you, which is lower cost, it's contactless, it's clean, it helps you with all the benefits that a POS machine would give, then that would help them expand their business, grow them transparently, still come into the digital fold and enjoy the efficiencies around digitization, and the customers will get the choice because now the customers can pay, obviously cash is a default, but then when it comes to digitization, QR is coming mainstream. You could add on to that based on the customer experience needs as and when required.
Okay, and I like the example that you give of a woman in Nandi Hills because that is probably a bit of a remote place, and it gives us a very good perspective of how much this digital transformation is now helping us, of course, close the gap with regards to financial inclusion, right?
That's right. Absolutely. Financial inclusion is something, I mean, let me just give you some figures which will help the audience appreciate this better.
Yeah.
So like I mentioned, 2 billion people across the world do not have access to financial services, a total of 7.4. Now, some of the challenges for those people are lack of IDs, social inequality, marginalized on the periphery of society. Some of it is due to lack of awareness and know-how. And in some cases, it's just lack of incentive. That's why, they don't bother to get into the fold. Now, how do we, as Mastercard, how do we commit ourselves? So what we've done is we've put a commitment across that we're going to get 1 billion people into the digital economy by 2025. And we expect 50 million of those to be SMEs and 25 million women entrepreneurs. So I think with that commitment and obviously putting aside $250 million post-COVID to help financially, technologically, and insights-wise SMEs to grow their business and find their way out of this very difficult situation, we have put that commitment on the table and we're putting that money to good use.
All right. Okay. And maybe before we take a very quick break, let me just throw the spanner in the works here, Victor, and ask you, are we looking at the near end for cash?
The simple answer is no. I mean, the reality is that as much as we dream about the elimination of cash, it will not happen. But what we can do is to educate, the consumers, educate the ecosystem, educate government, educate the entire spectrum of the economy to be able to actually promote digital means of payments. Sharia alluded to the fact that, or you alluded to the fact that 90% of all SMEs are driving business across the world, and that's a huge number. And obviously our commitment, again, as alluded to, is to get 1 billion people part of, this a digital economy by 2025, of which obviously we are trying to focus on women as well as, the specific SMEs as well. So I think for us is, it's a step-by-step process. You need to be able to bring in those SMEs into digital means, addressing, all the specific areas, which cash is obviously going to be a significant part of, but make sure that they do understand the benefits around, using digital means. And we've spoken about, the micro lending aspect, which we call the Mastercard Track Microcredit Program. And then we've spoken about the MFN, which is the agricultural piece, which Ria again spoke about. But we also need to look at, for example, the youth as well. So if you go to, for example, Ngong Road, where, you've got all these traders who are, making furniture, etc. That's a segment where digitization actually will play a role in, one, growing that part of that economy. Secondly, displacing cash where we can. And thirdly, obviously, allowing them to be able to actually borrow more because of the track record that is going to be brought about by the digital means. So there are many ways in which we can displace cash. But back to your question, it's obviously going to be a lot of work. I mean, we don't have any country today that is fully cashless, but we are working towards that. And a world beyond cash is possible.
All right. We have to go for a quick break, but we want you to continue being part of this discussion. We want you to continue being with us, of course, in this conversation. And we ask you, of course, to tweet us at NTV Kenya and at Victor Kiprop _ using the hashtag #NewNormal. What is your digital payments success story? What is your digital payments success story? You could also follow the conversation on Facebook and Instagram. When we come back, we could take a look at perhaps any question or comment that you've been sending us, and also talk about the risks that come with going digital and how they can be managed, and how the future is for digital payments in Kenya, in Africa, and across the world. Don't go anywhere. Right, you're watching Your World on NTV this morning. Thank you for staying with us. My guest, Victor Ndlovu, the Director of Country Business Development and the lead business development lead, of course, at East Africa for Mastercard, is still with me, as well as Sharia Ali, of course, the country manager for East Africa at Mastercard. Gentlemen, thank you for staying with us. Let's just pick up from where we left our conversation, and definitely the journey has begun. Everyone is moving digital. Anyone who was still thinking twice is now thinking very seriously, of course, about digitizing their systems, not just payments. But Sharia, you would agree with me that as we move digital, there's also the issue now of how secure we are.
Absolutely, Victor. I think you brought up a very important question. Since the COVID's advent, digitalization and e-commerce and online shopping has become a norm, and the data suggests in the same direction. Now, Mastercard is very much in tune in terms of our philosophy to make sure that we capture and we address any pressing or changing customer need or customer risks that they may be perceiving. So what we have done recently is we have launched the Simplify Commerce program, whereby we enable customers to create their online store, accept digital payments, manage their invoices, and minimize fraud via a single portal. We have recently launched our tokenization feature or technology feature as well in East African region. Now, let me explain a little bit. Tokenization encrypts consumer data by replacing the card numbers with digital tokens.
Okay.
Now, this prevents improper usage of any other location and provides additional security and a peace of mind for customers and merchants alike. So I think the bottom line for us is that all our future programs heavily cater to building the backbone of the economies, which are the SME, and we have to look at trust, safety, security, financial viability for our SMEs when we are designing our solutions. So, so that's our promise to our SMEs and to anyone who's planning to move from physical infrastructure to a digital world.
Okay, and of course that design has to come with some balance, because if you look at most of these solutions, they really have to be up to what bring the efficiency that most customers want, which sometimes could mean just walking past the counter and, you know, my card should detect, see the charge that I should be paying, and as I move, and that's what most people are demanding. But we also have to move abreast with also the need that you talk about of course, ensuring that we move safely together.
Yeah. No, you're absolutely right, Victor. Now, look, when we say democratization of payments, and you look at the socioeconomic pyramid, Mastercard's promise is that we will put options in front of our customers. And our customers, we don't sell credit cards, right? So if you come to me and say, hey, Sharia, I want a card, sorry, we don't do that. We are a B2B company which provides banks, non-banking financial institutions, governments, MNOs with solutions which their customers in a B2C environment could benefit from.
All right.
So when we look at democratization of payments, we provide options to our customers. And those options can be QR, that can be e-commerce, that could be card payments, that could be tap and go, like you mentioned, where you're passing by, you're in a rush, you're in a supermarket or something, and you just tap and go. So that experience, we provide those options, and then whichever option works best for that particular customer journey, that's the one that sells and wins the game.
Okay. And Victor, definitely, I know Sharia has spoken about how, of course, you at Mastercard are putting SMEs at the center of course, of your strategy at the moment, and to make sure that we all move together, we move forward together. But looking forward, what can SMEs expect, of course, from people at the center of digital payments like Mastercard?
All right. I'll start by mentioning that just in addition to the whole security pieces that Sharia spoke about, we also do have what we call a cyber resilience program for SMEs, which really try and address, a couple of areas. One, the whole security around the e-commerce engagement process, which is your password, your authentication. Authentication in the sense that, there are ways in which we would be able to then authenticate that particular SME whenever they are trying to do a transaction. We also look at other areas such as, phishing, how we try and, unmask, obviously the fraudulent and mischievous websites that typically would be trying to get information out of, the SMEs in this space.
Okay.
And obviously the software capabilities that are, built into this particular program. And so we have a commitment to ensure that, as we are working with these SMEs, we are protecting them, and we are making sure that, they do have the right tools and capabilities to be able to actually, manage their business. But just coming back to your question in terms of the future, I mean, the future is evolving. Couple of things come to mind. One is, our partnerships with fintechs. As you probably are aware, in this world of ours, it's all about partnerships. And we do know that there are some partners who actually provide solutions that will be able to get into spaces and work with us closely to be able to develop those solutions. For example, with the changing world that we have today, we have fintechs that are able to use social engineering programs or WhatsApp channels to be able to actually provide payment platforms. For example, you have solutions. For example, there's a company in South Africa called Acacia, who are also working with KCB Bank in Kenya, who actually are providing solutions that allow, the SME space to be able to actually, provide a digital invoice directly to the service consumer in this particular case. And they're able, for example, if I'm doing some plumbing work, I come and then I do the job, or rather before I do the job, I actually provide a quotation, and then I'm actually able to send that on a WhatsApp channel immediately. And then that consumer is able to see that, and then the moment they complete the job, they then send a receipt for that in real time, which takes away some of the burdens when you look at, for example, challenges around, can I have an invoice, can I have a receipt for the job that is done by an SME, which typically, they don't provide, or they don't have the capacity to then go back, prepare a receipt, and then come back, or use a paper trail in this particular case. So that's one of the channels. We also look at things such as, and I think Sharia alluded to tokenization. Tokenization for us is a way to go. We want to be able to actually store card on file details where customers are able to then, do transactions using their mobile phones and are able to then transact safely and securely in that sort of like online environment. Again, card controls, which are an important part of driving the whole message around convenience and functionalities. We want to be able to actually turn on, turn off a card whenever I'm transacting. If I know I'm exposed to certain segments that are particularly risky, I can actually turn them on and turn them off and turn them on only when I need to be able to transact in this particular case. So there are many ways in which we are actually looking forward to the future and preparing, the entire ecosystem to payments, digital payments, as obviously, we proceed in our journey.
Okay, and Shorai, I know you briefly touched on this earlier on, because most of the time the danger with us and businesses is we just look at the one side of the coin, which is digitizing my payment systems enables me to maybe do this fast, instantly. But there's also the other side of what do you do with the data that comes with this? You can be able to perhaps estimate how much income you would be able to generate in a month. You would be able to evaluate risk. And this is something you can concretely put on the table for any financier, even when you're asking for perhaps funding to expand your business.
Absolutely, Victor. I think you're hitting the nail on the head. The new real business generation is backed or based on data. Now, previously, a lot of data was not generated, or even if it was generated, it was not utilized, because data by itself doesn't really add much value. It is the insights that you can take out of that data that really then adds a lot of, let's say, opportunity. It can create efficiencies if you act on that data. Now, when we talk about financing, that's a major thing. Now, if I have a cash business, it'll be very difficult for me to put together the clunky ledgers and make sure that I can show my value chain in terms of my supply and in terms of my access to marketplace. But then if I digitize that entire platform, and platformification is the way for the future. If you look at Apple, for example, Apple's iTunes Store or the Apple Store is a platform. And then you have a lot of use cases that are coming out of it. Mastercard provides the rails, and we have multi-rails across the world, and those rails are growing. But then on those rails, what kind of user experiences or use cases are built on? How are they customized based on data? How is that data then utilized by the different partners, which could be governments, could be NGO, MNOs, it could be fintechs, and it could be e-tailers. How do they utilize to then improve their business and bring either diversification in their business or grow their business in terms of scale? So that is the real play of the future, in my view.
Okay, and I think that you would agree with me then that calls for an aspect of how do we educate these people, not to just see the one side of the coin.
Correct. I think education, again, awareness, like I mentioned earlier, there are three aspects in this. So one is there is a responsibility on big corporates and companies across the world to bring that know-how to the SMEs that are connected to their ecosystem. In Mastercard, we believe in something that we call doing well by doing good. What that means in a simple term is that it's not good enough that you just address your commercial aspects and aspirations and you achieve your targets. No. What is the impact that it's generating in the ecosystem that you're a part of? How do we uplift the SMEs, those who perhaps have a solid business model, but then don't know how to really grow on that business model? How do we provide the insights to them? How do we provide the know-how, the training to them so that they can come up the curve and provide a diversified offering to their customers? How can they build their business to a scale which will then enable them to invest further and come up with new products and solutions that the clients might be looking for? So I think that's a corporate responsibility that resides on us and on other partners that we work with. And we are working very closely by bringing all those partners to the table, putting real problems on the table and solutioning for it. Okay. And I think the future looks very exciting.
That's good, because I was about to ask Victor about the future, because Victor, clearly, if you look around Africa right now and in Kenya, you see the issues of smartphone penetration the numbers are really going up. And you see the issues of course, strong internet connectivity, the numbers are again going up. And we're talking about a population that is largely youthful. That means they are tech savvy. How can we take advantage and harness all these opportunities, of course, moving forward?
Okay, so first of all, Mastercard is committed to providing a support for the SME space, and which obviously includes the youth. So over the next 5 years, up to 2025, Mastercard has committed and is pledging 250 million in support of these initiatives that will drive payments within the SME space. And here we are looking at supporting, either through education, either through upskilling some of these SMEs, and also to provide support in terms of recommending solutions that will help them to be able to digitize, their own ecosystems, and obviously try and move away from cash, which we've spoken a little bit about. And so that is a commitment that Mastercard has pledged to the ecosystem to provide that support to actually grow the SME space, because we do realize that it's an important part of any development within a country, and it helps to speed up the digitization of all processes across board.
Okay, and of course, as you mentioned, Mastercard has definitely been part and a very strong partner in the evolution of digital payments so far. But we are now looking at the future, as Sharia has mentioned. What can we expect Mastercard, the role that they can play in the future?
So we are a technology partner, and we actually advocate for the growth of payments. We provide security in terms of payments. So when we look at the convenience, when we look at the security, the safety, and also the whole space around digitizing cash, our job is there to ensure that we communicate the right messages. We work with all the stakeholders. We provide innovative solutions. I think we spoke about cryptocurrency, and this is a new form of it's a new sort of like word that has come up in the recent past, which we are also supporting and looking forward to. So we don't know what the future holds, but what we can say is we certainly are there to be able to actually provide any payment solutions that support our consumers. It doesn't matter whether it's derived through your cards or your mobile or any other electronic channel. We are there to support every single channel that is available for the consumers. And obviously, one of the things that we typically, try and advocate is to ensure that, we take care of, elements such as the whole functionality piece. We also want to take care of interoperability, because we know that in any payment ecosystem, without interoperability, the ecosystem doesn't grow. And obviously, we then leave the economics to the participants who play in a free market world, and they need to determine the pricing in this respect. And so we are there to really bring together all these stakeholders, be it government, be it the consumers, be it merchants, be it the fintechs, bring them all together under one umbrella, and make sure that they engage in rules that actually advocate and promote the use of digital channels.
All right, and maybe to Sharia, because if you look around the world right now, of course, most economies took a hit from COVID-19 from March, I believe March 2020 to where we are right now. And if you look at budgets, which most countries are starting to table now, they're looking at how they can have their economies on a recovery path. And from where I sit, I believe fintech should be at the forefront. In fact, many people would say the recovery should be digital. Let me just get your views as we head towards the close of this conversation.
100%. I think the growth rates pre-COVID, we are all aware of globally. In Africa, like I already quoted, we were clocking around 5 to 7%, Victor. And it only makes sense that, when you have got a cost of cash to displace. And remember, the pool of electronic payments is just 15% of the total commerce. The other 85% is cash. So I think there is no castles to protect here. There's a lot of opportunity to go ahead and digitize. And if fintechs come and disrupt that and create a share play for electronic payments, and then we are there to fully support the fintechs in their quest to do so. Now, just one small example I'll just leave with you. I've been a banker all my life. Oh. And last 2 years, I've been looking at what Mastercard has been doing in the East African area and globally as well. And when you look at examples like Mastercard Farmers Network, when you look at examples like Jazaduka, there's a very rich fintech vibe that Mastercard creates. And I think that's what pulled me. I just recently joined Mastercard, and I'm very proud to be part of the Mastercard family. We've got a lovely team in the Nairobi labs in Kenya, and of course the Nairobi office. So a big shout out to them for putting together this fintech mindset and designing solutions which really bring out the value for the end user and solve for real problems, by the way. So I think that's the fintech spirit. Regardless of whether you're fintech or you're a big corporation, you need to have that fintech spirit to disrupt and look for the new behaviors and trends.
And I love that you've mentioned the fact about what the lab in Nairobi is doing, because from where I sit, for most of this SMEs, that some of the challenges they face are unique. And if you're going to design a product that should serve all across the board, perhaps they might be disadvantaged. Talk to us about the importance of course, designed SME-tailored, of course, solutions.
It all, Victor, this is such a deep question. I wish we had more time.
Yeah.
When you're looking at real problems, you have to stand and observe. You have to observe customer journeys in the rural areas. You need to look at SMEs. What are the common issues that they're facing? And you have to so first stage is to really have a close look at what are the problems, what is the life cycle, how are things moving for them. Once you have identified a common problem, then you need to know that we need to bring partners together, look at that existing customer experience or SME experience, then agree on how you can enrich that. Now, that's just one part of it, right? Then you have to run it through hoops of the solution that you're designing. Does it cater to trust? Because if you don't have trust, you don't have much to stand on. Is it safe? Is it speedy? Is it secure? And once Mastercard Labs, the way it operates is once they've checked for all of those things, we test it out, we make sure it delivers what it's supposed to do. And then we go out with confidence to our customers, and the results are in front of us. I think the uptake we're seeing right now is incomparable to what was happening in the past. So credit to the team for having that fintech mindset. Yeah.
Okay, and of course, as you mentioned, we don't have the time. I might have to start to get your closing remarks. But just before we do that, Victor, for anyone, any consumer who is looking out to try out a new payment systems, what is the first 3 things perhaps they should look out for before they agree to use a new payment perhaps option?
So when you look at consumers, we are looking at, first of all, is the convenience, security, which is trust. And also, finally, you're looking at, the whole security piece. I think in Kenya here, in recent past, we've known and we've heard from consumers interpreting payments in the digital world as unsafe. And once you are able to then convince them that, there is a lot of security that has been layered onto, the solutions that are available, then they start becoming, they start using the products, and they start finding out that actually it is more convenient to be able to use those products. So safety, security, and convenience, along with reliability as well.
Okay, and let me just get your closing remarks right from there. For any SME, for any consumer who is still thinking twice about digitalization and digitizing payment systems, there are concerns about security, there are concerns about perhaps how long it takes. Give us your closing remarks.
We at Mastercard are here to actually provide support to all the SMEs. We've spoken about the various areas that we actually work with SMEs, from the Mastercard Farmers Network to the micropayments, to obviously the financial literacy programs that we do. We also provide solutions in the risk area. We spoke about the cyber awareness program, and we are really targeting the women, we're really targeting the youth, we're really targeting agriculture. I think those for us are key drivers to be able to help that SME alongside our pledge and commitment to provide $250 million US dollars to be able to actually get the SMEs to participate in a digital ecosystem. And we'd like to see and work with those particular SMEs in the space.
Okay. All right. And Sharia, you mentioned at the beginning of this conversation how COVID-19 has accelerated, of course, the digitization of payment systems by almost 3 to 4 years, perhaps, or even 6 years. We are up to 4 years ahead of where we should have been. And that is, of course, credit to COVID-19. That means if anyone is ever in doubt that the future is, is digital, then they should perhaps clear that doubt. Talk to us about how then we can sustain this momentum, especially for the benefit of our economies that really need that growth.
Wow, you've saved the best question for the last, Victor. I think that, look, what has COVID taught us, all of us? That we're all in the same boat. This virus does not differentiate. It has no view on social inequality. It doesn't have any, exclusions. We're all in the same boat, and that is a very important point to take away where we are as humanity. Now, when we are looking at the future, we're looking at how can we predict the future, one. B, how can we be ready to, so we learn what we learn through our experiences, right? How do we unlearn that and relearn the skills and the strategies that we need to apply for the future? And that's the thing. As the trends are showing us that things are changing very rapidly, so we need to be ready to change, and that's something that Mastercard does very well. Secondly, relationships. We need to ensure that we don't just guard our castles in a silo mentality, that it won't last for long. You've seen Lord of the Rings movie or Harry Potter. You see those crowds coming in and they just take over the castle whenever they try to guard it.
Yeah.
What we need to do is actually transform that castle. And how do you transform and transmutate the castle? Is by forging alliances, forging partnerships, bringing other players onto the table and solving for real problems. And I think that's the spirit, and that's the fintech spirit, again, that you talked to earlier, that we need to build on. And I think that with that, if most of us kind of agree to that or work towards it, I think we have a great future to look ahead to. So thank you for that opportunity, Victor.
All right. Wonderful. What a wonderful way to close today's conversation. Of course, many thanks to Shorea Ali, is the country manager, East Africa for Mastercard, as well as Victor Ndolvu is the director of country business development, East Africa as well. At Mastercard, we have been talking about the impact, of course, of COVID-19 on digital, of course, digitizing payment systems and what the future looks like. And of course, many thanks to you for keeping us company since the first hour of the conversation and this last hour, which I have thoroughly enjoyed. We will see you again on Monday, but keep watching. I've been your host, Victor Kipro.